Hey, what's up, guys? I'm going to be talking to you today about real estate tokenization. What does it mean to tokenize a real estate asset? So, tokenization is a way to digitally securitize real assets. To securitize an asset means to divide it into shares that you can sell to investors. Tokens represent a predefined share of the underlying asset. They're often called security tokens. These tokens are secured through the blockchain technology, and they're tradable via crypto exchanges or ATSs, which is alternative trading systems. So a digital representation of asset on the blockchain. Number one, you convert the rights of an asset, be it real estate, notes, art, into a digital token. Then there's smart contract codes that allow what can and cannot be done with that token. And the tokens are put on the blockchain. This provides transparency. You can trade it globally, and there's automation and less fees involved. So a real world scenario would be, let's say that you want to purchase a property, and that property is $100,000. Let's say, for example, it's divided up into 100 tokens. In this scenario, each token represents 1% share of the asset. When you buy one token, you actually buy 1% of the ownership in the asset. You buy 50 tokens, you own 50% of the asset. Buy 100, you have complete ownership of the asset. Now, this is really, really cool because in the future, if you own 100 tokens in that asset and you want to sell 50 of those tokens, or 25 or 30 or one of those tokens, you're able to do so. It's very seamless, it's very cost effective, and now the new owner of those tokens gets all the same benefits that you would have gotten. There are already real world examples of this, guys. There's already a property that has been tokenized in St. Regis Aspen. So the well-known resort of St. Regis Aspen preferred to tokenize their capital raise instead of doing a traditional capital raise investment. They were able to attract over $18 million. And in Q3 of 2020, the Aspen coin was placed on the T0 ATS, Alternative Trading System exchange. So this is a real world example of a property that has already been tokenized, and there are going to be more and more properties. There are already real estate investment funds that are being tokenized as well. So listing tokens on an exchange. Once tokens are created and sold to investors, they need to be listed on an exchange so that investors can trade their tokens. There are not many listing options out there, but the list keeps growing. Many of the most popular cryptocurrency exchanges are in the process of obtaining regulatory approval to list security tokens. So understanding the benefits, guys. Number one, this dramatically reduces the barrier to entry into investments. So traditionally, commercial real estate or real estate is a very capital intensive investment. I've seen as low as $50 for a tokenized real estate fund already out there. Traditionally, it costs anywhere from $50,000 to $100,000 to invest into a real estate syndication or a real estate investment fund. Now, of course, buying a single family property or buying a property in general, you can get anywhere from, if you're a first time home buyer, 3.5% down to 100% buying property all cash. But for the most part, investment real estate is very capital intensive, and this will greatly reduce the barriers to entry. Number two, it increases liquidity through secondary markets. Again, real estate is historically a very illiquid asset class. When somebody invests, it's usually for 5 to 10 years at a time. Now, if somebody invests, in the example, $100,000, and they want to sell after a year, part of their shares, they're able to do so. If they want to sell all their shares, they're able to do so. Number three, because it's on the blockchain and it has the security of a public ledger, it's very irrefutable. If a transaction happens, all of the computers know about it. It's on a public ledger, and it creates added security. Number four, there's automation through smart contracts. It cuts out the middleman, it reduces costs, and it's very seamless. If somebody in Singapore wants to buy X amount of tokens of this particular property in Colorado or in New York, then they're able to, do so in prime time Singapore, which would be, you know, in the morning hours of the U.S. So number five, fractional ownership on a global scale. Again, on a global scale, it's gonna add value to investors that want to invest in U.S. markets or vice versa. It just really adds a lot of interest on the global scale for people that want to get their money out of their own fiat currencies in their country because of wars, because of governments, whatever the case may be, and they want to invest in the US. It just makes it that much easier to be able to do so. So the future of commercial real estate tokenization. Blockchain technology is already a disruptive force in the financial world, but the impact we've seen so far from Bitcoin is just the beginning. The future of blockchain technology will be STOs. If cryptocurrency is digital money, security tokens are digital ownership. Again, if cryptocurrency is digital money, security tokens are digital ownership. The global real estate value is $228 trillion. Private asset owners are now have the access to technology to securitize any asset. Owners and startups will adopt blockchain technology and issue security tokens to run phase even more and more as time goes on. Now imagine being able to own shares of infrastructure in your own city. Or if you're the speculative type, you could short real estate in your area that you think is overhyped and go long on real estate in an up and coming market. Investors will be able to allocate capital any way they see fit. STOs are going to change investing forever. In the very near future, you'll be able to log into your favorite cryptocurrency exchange and buy shares of a world-renowned hotel, for example. So that's all I got for you guys. If you want more information, feel free to reach out to me anytime. Drop a like, subscribe for more great content, and message me anytime. Love to chat some more with you guys about it.